Hello, my dear friends. This is CH in my Hegde, your learning partner for financial management. Welcome to day 12 on Let's Learn SFM practically. We are dividing the session into 4 parts. First, quote of the day. If you focus on results, you will never change. If you focus on change, you will get results. Basically means let's not worry about the results of our predictions. Let's focus more on our process of analysis and understanding. If you focus on the process, the results will take care of it automatically. Terms of the day, many people, what you're waiting for? Option chain analysis. What is option chain? Let us keep it very simple. I'll straight away go to the website and we'll try to explain what it could be. Okay, so let's go to simple Google and say NSE option chain. That's all. It will take to the website. So I'll go to the NSE option chain. We have been using Reliance as example. I think now I'll go for my next favorite stock. I mean, my favorite. Okay, disclaimer. You do your own analysis. And that is, I would like to go for HDFC Bank. Not sure whether you are able to see this clearly, but let me try to zoom a little bit. Okay, so you see left side we have calls, on right side we have puts. So I'm just showing you the calls part now. So left hand side what we have is call, right hand side what we have is put. Various elements are there. I will not be discussing everything at one shot today. For example, IV, implied volatility, is a very important term. I don't want to focus it now itself. Everything I don't want to explain in one day. So what is this option chain is all about? At a different strike price, what are the data points? It's a chain, one after the another. Strike price of 1040. What is the call price? HDFC Bank, currently it is 1481. So you see, does anybody have a position on 1040 strike price? Why will anybody have 1040 strike price? That is a call option. Will anybody expecting it goes to around 1040? I don't think anybody is expecting to that. So neither a call or a put. So let me think about the put option. Yeah, there is some quantities trading that also. Okay, so option chain is all about at a particular strike price, what are the call options which have been entered into, what is their price, and other data points on the left hand side. What is the strike price? What are the prices, option premium for this strike price under put option, and other data points is coming on the right hand sides. So you can see this yellow color, I mean the blue one, at a different strike price. You're having data points on left side also, right side also. And you see there is some color here specifically, right? I'm not sure whether you can identify some brownish and then it's white. And here right hand side, you have some whitish and then brownish. And they are called as in the money options and out the money options. So if you take an example of call, when the call option is exercised, I mean when the call option is useful, when the market price is likely to be more and strike price likely to be less. So you can see all these strike price, right? For example, I told you the HDFC Bank has got a current market price, yesterday close price 1480. You see after 1480, you have a whitish color in call, left hand side, which means these what is in white colored are called as in the money options. Why in the money options? Because if the market close at this price, that is at 1480, let's say, then 1500, 1520, 1440, 1560 strike prices, all these are not going to be exercised. So what is in white is actually called as out the money. What is 1480? 1480 is the strike price. 1481 is the market price. So that is going to be exercised. So hope you're able to understand. When the market price is less, the call option is not exercised, put option exercised. When the market price is more than the strike price, call option exercised, put option not exercised. That is why you see two contrasting color, white and white, a brown and brown in this table you can see. So basically representing in the money options and out the money options. What is in the money options? The options is likely to be exercised. So when the strike price is lower, see market price was 1480. So when the strike price is lower, now will you think market price will go to 1380? I mean, if the strike price is 1380 and market price is 1480, comparing that. Therefore, if the market price is 1380, you know that if the strike price 1380 and market price is 1480, in that case, market price is high, call option will be exercised. That is what you see these two contrasting color. Okay, let me give you the context once more. In the money options means the options which are likely to be exercised. Out the money option means the options which are not likely to be exercised, and that is what you see in this option chain analysis, option chain data points on the left hand side. That is about call option, in the money, out the money, and right hand side it talks about put option, in the money, out the money. And call option, put options are opposite in nature, and that is why you see wherever this brown color ends and the brown color starts for put option. Whereas other data points you have to understand, like what is implied volatility, last trade price, bid quantity, bid price, that is basically sellers what is asking for, what the buyers are ready to pay for, ask quantity, ask then okay, more same thing, and OI, open interest. So two important term you have to understand this option chain is, one is open interest and the other is implied volatility. They are very important as far as option trading is concerned. I'm not teaching you all the option trading, option technique, option terminology in one session, because I don't want to bundle with too many things. That is what will happen where too many things are told. You like, oh, something great is happening. Did you understand? I don't know, but something great is happening. It's like watching Christopher Nolan movies. You feel you are trying to understand, but honestly, you're not really understood. So that's why I'm trying to give a slice every day, and I hope you're watching my previous videos also and subsequent videos. Then only you'll be able to understand the complete link and complete continuity. So today we just talked about the option chain, which is nothing but at a different strike price. What are the data points relating to call option on the left hand side? What are the data points relating to the put option on the right hand side? In the money option, out the money option is also reflected by different color, and that in the money option and out the money option is identified by comparing the spot price with the strike price. When the spot price is more, then it is in the money for call option. If the spot price is less, strike price is more, and in that case, that is in the money for put option. I hope you got these points, basics. Two important points, open interest and open interest analysis and implied volatility, I'll be discussing in the future segments. And I know one question I have to answer, which I've asked in Telegram channel. In my Telegram channel, if you want, the description is available. In the description, link is available. Which is more riskier? Is it option, future, or spot market? Mainly about three areas I was trying to discuss. Wait for some more time. We will be discussing in the future sessions. I hope you got an idea about what is an option chain is all about. It is nothing but for a strike price, what are the different data points. Okay, we have not looked at the analysis part. We just looked at the data part. Where it is there, what does it mean? We are not trying to do any interpretation. We are not trying to do any decision making. Okay. From this only lot of option Greeks, like even delta and all is arrived, like option delta, even gamma, lot of things are derived based on these data points. But you first try to understand about this. So more about it when I come to tomorrow, I'll be discussing it, so that My objective is I will discuss little bit about today, term and the events today. And before you come to tomorrow's session, I hope you would have spent time understanding this more. So when I take up slightly higher level tomorrow, you will be better equipped. Okay. So keeping that in mind, let's go back to our PPT. Hope you understood these three terms: option chain, in the money, out the money, at the money. Okay, at the money means at exactly the strike price is equal to market price. At the money is very, very rare. It's exactly equal. So in the money is one side, out the money is the other side. So at the money is very rare. At the exactly market price equal to strike price. Okay. So previous events, what happened? Yesterday assessment, we thought 15,300. Not really worked out well. It happened to be 15,200 approximately. Nevertheless, we are very close, not very close in the sense, but we are not wrong. That's what I would like to say. Yesterday, what and all happened? The market ended again flat like the previous day. FII again bought, DI again sold like the previous day. HDFC Bank, Reliance, the top heavyweights in the Nifty were down, looked weak yesterday. And HDFC Bank also had got a news. The CEO HDFC Bank raised concern about some retail loans, corporate loans, whether they will be collecting on time. There is some NPA issue could be there. I mean, he's trying to give his opinion, but market took it very negatively. Therefore, the HDFC Bank down, and as a result of HDFC Bank, Nifty Bank is also down, and Bank is also down. So these are the two proper index. We also use it for trading purpose. One is the Nifty and Nifty Bank. So I'll be using these two terms when I go to the future sessions in option trading. I'll be doing around these two index only. Okay, future assessments. Let's go back to the internet and see what and all would happen. Let's look at the chart first. Let's see what does Nifty chart says in last one day. Nifty last one day starting at, okay, this is 1 minute. I'll make it as 15 minutes. Okay. Okay, so you can see that 24th. Okay, yesterday chart 25th, right? Yeah, so it started open, then it kept on going down. You see a lot more red candles. That means market is totally bearish. Market came down, it took a support. You see that's the support points. That's 1 second. You see where the market touched at the bottom, then it started going up. So this we usually say as a simple support level. What is that support level? Around this 15,150, 165. So rounding it up, 15,150 is our support level. So today, if you want to trade anything, would have taken 15,150 as the support. And even if the market comes down, this will not go below this. And on the top level, I think 15,300, there is a resistance. Market is going up, and after it's coming down. So 15,300 and 15,150. In that range, I think the stock market is likely to move. Indian stock market. Let's look at global indices on money control. Let's do a simple analysis. Nasdaq yesterday ended very flat. Not really anything great to talk about. European market yesterday down, and the DAX is up. So mixed returns. SGX is showing flat. Nikkei is positive, Hang Seng positive, Taiwan positive, Kospi negative, Setcom positive. Okay, Jakarta positive. So again, I think global market is also giving mixed returns. So let's come back to the PPT and try to do analysis. Local cues are, I would say, this is nothing great. No news extra is coming in. So I will say like a mixed in local cues. Global cues also mixed because some index are up, some sticks are down. Chart analysis, again Nifty is getting consolidating. So there is not much of it. So I might take. So in these cases where you don't have any specific signals, we should not trade on those dates. We call that as no trading days. Anyway, my particular assessment, everybody is mixed. I will say I will go with positive approach. I am positive. Because when there are no signals, let's be positive. I know conservatism, people in the accounts, people say let's be negative, but I'm optimistic person. Things are not very clear. Let me be positive. And Nifty also think opened a positive. Let me see what happened on opening price. Okay, Nifty opened a positive 15,250. I think it is around that only. Market is not going to move very drastically. Let's say, I think my expectation for today is around 15,250. So I think that's it for the session today. We talked about the basics of option chain. We have not done any analysis, but we just understood the terminologies and the data points in option chain. Regarding option interest and also regarding, more importantly, implied volatility, we will be talking in the future sessions. If you want any other topic to be covered in these sessions, please join the Telegram channel given the description and have a comment there, and I will try to cover those points in the future years. And also, today is Wednesday. Tomorrow is Thursday. So if I get maybe good views, good response from this videos, maybe tomorrow I'll try to do one option trading live, provided I get good response. If I don't get good response, I'll try to do in the next week, because on week expiry date, first I would like to tell you how the movement will happen, because on expiry date, it's more easy to explain. Difficult to trade, but more easy to explain. And this week is a combination of weekly expiry as well as monthly expiry. So we can also deal in stocks, or we can also deal in index. So let's see how the response is going to be. If you feel, if I get good response, if I feel it, I will try to do a live trading with a strategy, maybe a straddle or a strangle, something like that, on the expiry date, which is tomorrow. So hope to see you soon tomorrow with a new topic. Till then, keep doing analysis. Happy investing. Take care. See you. Bye-bye.